Hello and welcome to India Market Close right here on NDTV Profit and pull up the markets. And we were off the lows of the day at somewhere around 2, and you can argue that that's how we're kind of shaping up. So on the headline numbers, a bit of a nothing kind of a day, if you will, but a lot of action within that, and the heat map will show you that. But before we get to individual stocks, bring up the bank Nifty and see what the banks are up to predominantly, and the mid cap and the small cap indices as well. So flatlining for the Nifty bank as well. A mid cap index flat as flat can be. Small caps too started off about 0.5% higher, completely gone off. So hardly any move there on the benchmark indices of any kind whatsoever. Now get the heat map up on the screen and show you what's moving and what's not. So there's gains for L&T, consistent order flow. Very likely one of the reasons there is strength in power grid. Adani Enterprises, couple of percentage points higher. Maybe the Lucknow airport factor, maybe just the overall sentiment that we're seeing within the Adani Group stocks, because a clutch of them have done well. Adani Port out here is up about 1.17% as well. There's some strength in BPCL today. After a while, we're seeing that uptick come in. The stocks had corrected a little bit. Maybe some bit of uptick was warranted, just that the timing is never quite known. We're seeing it today. A lot more green than what was there at the start of the trading day. So that's the other aspect to keep in mind. Within the losers, Asian Paints continues to sulk, 3.5% lower today. And clearly 3 days on a trot now, this stock has seen some pressure. Apollo Hospitals, 2.5%. Divi's is down about 2% too. And surprise, surprise, while metals were opening up because of the whole China factor, I don't know if the iron ore prices going down is an indication to the street that all may not necessarily be well, even with the China opening up factor. But today, almost all metal stocks are sulking today. The Nifty Metal Index would have certainly been under a bit of cloud in the session today. Right here. Okay, thanks for pulling that up. Save for a few small ones, and Adani Enterprises ain't technically a metal stock, neither is APL Apollo, just that they're a part of this index. Look at pure play metal names, Tamanna, all of them sulking in the session today, and not surprising out there. Yeah, metals having a bad day, as is IT. Quite a tough day for IT stocks as well in play today. And there you have it, the entire index down and persistent also finding that pain. But Niraj was talking about enterprises and ports. The entire Adani pack is up in the green today, whether it's a Total, whether it's an Energy, whether it's an Adani Green. So you're seeing that kind of, complete trend across the space. Adani Energy, in fact, about 9% up. Some other movers through the day, and let's talk about Alchem Labs. Alchem Labs is seen a bit of pain after reports that their IT raids undergoing some of their locations. The company has issued a clarification, in fact, just a few minutes ago, saying that they have cooperated with the authorities. There were searches in September 2023, and they're not aware of anything new right now. So that under pressure. Vodafone's the other stock in focus. Their board is going to meet to consider a fundraise. Now reports doing the rounds that promoters will be putting in money, and they don't seem to have managed to find anyone else to invest in the company, very simply and broadly put. So Vodafone under pressure this morning as well. Rain Industries is the other one perhaps that I would pull up in pain. Actually Q4 results, not Q3, because they follow the calendar year. But Rain has seen about 1,000 crores of losses versus a mild profit last time around, 150 odd crores, and that stock is down. So Rain Industries bearing the brunt, and PB Fintech is the other one that I would pull up. A large trade which has brought it in focus. A big chunk actually of the equity has changed hands in trade. So you're seeing PB Fintech there up in the green as well. But overall, I would say not a very action-packed afternoon at this point. Niraj, you'd perhaps agree. Not too much happening there in the markets. Some tentative kind of moves. Very, very, very well put, Tamanna, and frankly, that's it. On the index, at least, that certainly is the case. And let's pose that very question to our experts today. On the technical side, Hemen, Kapadia, Senior VP Institutional Equity, KR Choksey Stocks. And on the fundamentals, Mr. GR Chokkalingam. Gentlemen, both of you, thank you so much for taking the time out and being with us. Hemen, I'm tempted to ask you about a big call that you'd given on Adani Enterprises a few days back. That stock is turning out well. But let's start off with whether you have a view on the index or no. Couple that up, of course, with a view on Adani Enterprises, if you will.
Okay, Niraj. Frankly speaking, as far as the Nifty is concerned, we were straining at the leash for the breakout actually. We've been in a range between 22,137 and 21,137 and 22,125 minutes. We've gone above that 4 times intraday, but we haven't closed above 22,125 even once. No, that would be a mistake. I think we closed above that once on Thursday, and we've slipped back again. It's very clear that we need to now once again close about 22,125, and this time around, I believe it won't be crying wolf. It will be the real thing. 25,500, 22,500, 25, 22,800 coming. Now, volatility, long expiry, 5 weeks, Niraj, and the weeks which was 15 or slightly sub 15 on Friday, now bounces back to above 15 again. One would have thought that after 4 weeks of flirting with the 16.5 level, we'd finally seen the worst of the weeks and we'd see a cool off coming in. No major event risk that I can think of. And with a close slightly below 15, I thought we'd be more, we'd have simmered down a bit. Now that's not happened. VIX is above 15.7. So frankly speaking, the VIX needs to close up below 15, but expiry, so that doesn't look like happening. Bank Nifty isn't bad, but it needs to not break 46,500 and overcome 47,100. Reliance is almost at an all-time high, and going back to Adani Enterprise, I have a repeat buy call on Adani Enterprise because I still feel the stock is going to 3,800 and 4,000. I'm still not sure why. We've seen a lot of relative strength. We've been consolidating. I gave a call earlier. Like I said, I'm repeating it. It looks great. It's just that, Adani Wilmar shot through the roof. The other stock moved. So I don't know why Adani Enterprises is not moving, but when it moves, it will move. So I am reasonably, or I'll say fairly confident. Further upside seems like a very distinct possibility. The only risk is the market risk. The markets were to somehow reverse, doesn't look like, then I don't expect Adani Enterprise to outperform. But if the markets remain positive, Adani Enterprise will do well, Niraj.
Yeah, absolutely. Just to take that further, of course, and with all the standard disclosures, Hemen, follow up for you, because today is not just about enterprises. Look at energy, up about 9%, green, Total, the entire pack. And of course, you're watching NDTV, which is owned by the Adani Group. So it's a subsidiary, so that disclosure there. But which of these on the charts do you see has potential for a further upside, Hemen?
I would avoid a comment on Adani Energy, Tamanna, because family and me have a position, so I would not like to comment on that. But NDTV, and frankly saying, all of these stocks are now, let's take a NDTV. We've been moving sideways for 11 weeks, Tamanna. And mind you, the stock hasn't retraced much. It's just consolidating, moving sideways. The breakout level comes in at 308 and we are still 277. So I would say this is technically cheap because the stop loss is closer and the range is just there. So NDTV looks good. Okay, AWL, Adani Wilmar has moved, no doubt. But for Adani Wilmar, the breakout is at 420 and we're still at 402. And this is after, once again, almost 11 weeks of a consolidation. So take your pick. Adani Wilmar, NDTV, I think both look good. If we close at this level, okay, we are not very far away from monthly close, Tamanna. Adani Wilmar will have given an upward bar reversal on the monthly chart. And we are ending a 15-month correction. Frankly speaking, it's a no-brainer. So I would buy both NDTV Profit as well as Adani Wilmar. And if you want something fast or, we should move first of the blocks in F&O, Adani Enterprise.
Okay, the stock is NDTV. You're watching on NDTV Profit. So we should make that clear, Hemen, with all the standard disclaimers once again. Chokha, very good afternoon to you. I want to ask you about OMCs, which after a few sessions of pain are seeing a retracement. And the verdict on it is fairly confusing. It depends on which report you read, which brokerage says what. Do you think that there is a consistent turnaround in OMCs? Any of them you would touch in the oil and gas pack right now?
Yeah, I agree with you. There is a lot of confusion in analyzing these OMCs, even for a person like me. But having said that, we see a lot of volatility in the earning stock price. even on quarterly basis in OMC. So very difficult to see a consistent performance from this pack. Since these stocks have gone up substantially from the bottom, I would rather focus on stocks like ONGC rather than oil marketing companies, because if there is any spurt in the oil prices, I don't think in the next 6 months fuel price can be allowed to rise significantly. So therefore, I would avoid OMCs at this juncture in the short term.
Okay, and avoid on OMCs in the short term. But we've been speaking about media this morning, and the big news, of course, is the official report that Reliance and Disney have signed a pact to merge their media business. More clarity awaited on valuations, etc. But what does this mean for the space? What does it mean for RIL? RIL not showing any great moves today, frankly, though they seem to have perhaps bagged the Disney India business at a cheaper than earlier reported valuation. Having said that, Jinesh Joshi, research analyst at Prabhudas Leeladhar, is joining us for more on the story. Jinesh, thank you so much for speaking with us. Just to get a sense from you, this has been widely reported, but do you think at the end of it, it is a big bump up for the media play as far as RIL is concerned?
See, obviously, what will happen with this merger is that Reliance will own all the sports properties, be it IPL, ICC, or BCCI. Because if I talk about the TV rights for IPL, that is with Disney Star. Even the ICC digital rights are with Disney Star. So what will happen with this acquisition is that obviously RIL's bargaining power, or for that matter, TV18 bargaining power increases meaningfully, and it will become a one-stop shop for sporting property in India, especially cricket. So obviously that is a positive, but valuations are something which remains to be seen, and especially sports properties, given the inflation that we had seen in the IPL digital rights or TV rights for that matter, even ICC rights. It remains to be seen whether these sports properties indeed turn profitable or not. But net from a media perspective, this is a big acquisition, and it will put TV18 or RIL in a very sweet spot.
In terms of the structure of the merged entity, will this be outside of Viacom 18 in your view? Do you see them creating a separate entity for it overall? And then in that sense, does the management structure change?
Not really. I mean, as per media reports, I think a step-down subsidiary might be created within Viacom 18, which houses the media and entertainment assets. And the plan is to absorb Stock India via some stock swap, which was being reported earlier. But at that point in time, it was being mentioned that RIL may own 51% in the merge. And right now, the reports are emerging that RIL may own about 61% in the merge. So more details are awaited, but to my mind, it will be within Viacom 18 via some kind of a subsidiary structure, so to say.
Jinesh, if indeed the deal turns out the way, the large contours of the deal turn out the way the Bloomberg story has mentioned, and which is a 61% stake valued at 3.9 billion, and assuming that Viacom 18 is the carrying entity through which all of this is carried out, what does it mean for the media assets of the Reliance Group, Network 18, TV 18, effectively Network 18, because that's where everything is getting consolidated?
Exactly. So that is what I mentioned earlier, that it will become a sporting powerhouse, especially for cricket, because IPL digital rights are with them, and now with this acquisition, and also the fact that the ICC TV rights, which earlier were sublet by Disney Star to Sony, and given the fact that the merger has been scrapped and he has decided not to go ahead with this TV rights deal, you will see everything bunch up in one entity. So their bargaining power is going to increase meaningfully.
No, which I agree. So therefore, I'm just trying to understand, is there a valuation or a number scenario that if indeed this were to happen, then what it could mean for the business? Because the stocks, as we've seen, have rallied a little bit from the recent lows in the last 2-3 months. Is there room for more, is the question?
So see, it is a slightly difficult one to answer, but I would try to take this in a different way. Given that they'll have all fixed rights, be it TV or digital, for sports. If I talk about the pricing power within the subscription packs, I mean, very recently, once the NTO 3.2 announcement had come through, we had seen quite a few broadcasters take a price hike for their bookings, which was in the band of about 6 to 15%. So that can happen with Jio as well. Even right now, if you look at Jio Cinema, their subscription plan is at about 1,000 rupees on an annual basis, and IPL is not behind paywall. Even the BCCI properties are not behind paywall. So that may go behind paywall, which will increase their revenues and profitability. But net, it all depends upon how much increase they are able to take through, and also for advertising, and you will see a meaningful bump up come through because of the improved bargaining power, so to say. So overall, exact math is very difficult to decipher right now, but as I mentioned, they are in a good spot, so to say.
Just one take from you on what this means for the industry, because this is going to be a massive consolidation. On the other hand, you've seen the Zee-Sony deal fall apart. What is industry impact right now, and does this give an opportunity to increase the cost for entertainment and sports products, since now you're going to have a behemoth in this space?
Exactly, so that might happen. And also, if I talk about the consolidated viewership share of Star India and Viacom, it will anywhere be between 30 to 40%. But I forgot to mention one thing, how CCI takes up this entire deal. Because just to put up things into perspective, when the Zee-Sony merger was announced, we was asked to kind of divest the channels to meet the merger guidelines. And if I talk about this current deal, especially in two markets, which is Kannada and Marathi, where both Disney as well as TV18 are equally strong, and their viewership share is quite high. It remains to be seen as to how CCI views this. But to answer your question, yes, the cost of entertainment might rise, because some properties which are currently available for free on Jio Cinema, they may eventually go behind the paywall, which can increase the cost of entertainment.
Yeah. As of now, this season at least, the key cricket products were free, which was great for viewers and consumers, not maybe so much for the competitive platforms. Thank you so much, Jinesh, for speaking with us and helping us break down that big media deal. Not too much impact on the RIL stock today, in any case, about just 0.5% down. We'll take a very short break, but we're coming back with all the volume buzzers and the action in market in the last round of trade. Stay tuned.
Right, back with India market close right here on NDTV Profit in conversation with Hemen Kapadia and Chokkalingam, and we'll also get in a sense of what some of the key volume buzzers are in the session today. But amongst things that have moved around, there has been a bit of an uptick in some of the oil marketing companies in the session today. We did this piece on the editor's cut this morning. We spoke about the possibilities of the upside versus the downside. Mr. Chokkalingam, good afternoon. In this corrective move that we've seen over the last 7 days into BP, HP, IOC, are you a buyer or would you stay away?
I would stay away from oil marketing companies. Rather, I would suggest PSU stock like a ONGC.
Why so?
Because this is the election time and oil price keep remaining volatile. International political situation is also not conducive. So there is a possibility of oil price spotting in the short term. And because it's election time, there may not be aggressive hike in the fuel prices. And therefore, better to be defensive by not buying OMCs, which have gone up a lot in the short term. Rather, if oil price goes up, there's a strong correlation between both oil and gas prices. So that could be beneficial to ONGC. So therefore, one can focus on ONGC instead of OMCs.
Okay. Hemen, comment on the charts. BPCL fell about 6-7%, has taken a bit of a bounce today. From a trade perspective, is it worth looking at BPCL?
Yes, Niraj. I think if you take a very short-term view, we've seen a 3 and 3, 6. This is a 7 trading session, Niraj. We've seen an upward key reversal coming in today. If I were to look at the intraday charts, I think the hourly charts are showing technical positives. So I would say we've been up for 5 hours in a row. So we are at 620.29, maybe at around 625. I think one can take a small contra buy call because a very, very near-term bottom seems to have been made. 1 second, there's a very short term.
There are a host of stocks buzzing in trade today as well. Kanika Johnson with a list of some of those. Kanika, good afternoon.
Good afternoon, Niraj. First, we have Yasho Industries, which saw an intraday high of almost 13% and its volumes trading at 13 times its 30-day average. Then, the key reason for this would be that it had a capacity expansion greenfield project at Pakhajan, Gujarat. Now, this stock observed a consecutive upward trajectory for the second day in a row. And the management also gave guidance for its capacity expansion at Greenfield project at Pakhajan for FY26 at rupees 550 to 600 crores. Next, we have Alchem Laboratories, which was down by almost 14% today. And this was mainly on the back of media reports alleging that the company is involved in tax evasion. But countering these reasons, the company mentioned that these allegations are factually incorrect and that the company had fully cooperated with the income tax during the survey proceedings in September 23. Next, we have Greenfly, Indocount and Adani Wilmar, which were mainly buzzing on the back of large trades happening today. Greenfly saw 3.5% equity changing hands with an intraday high of almost 10%. Similarly, Indocount was also buzzing in volumes wherein 4% equity changed hands, and Adani Wilmar was also buzzing on the back of 1.3% equity changing hands. Now, these were the 5 stocks that were buzzing in trade today.
Okay, thanks a lot for that. Some strong moves there, particularly for this stock, Yasho Industries, if you can pull that up, because I think it was up about 20% in Friday's session. It's up around the 5.5% today on good volumes. Small cap stock, the small stock, not a very large stock, but clearly has had a really good move the last 1 week. So keep these at the back of your mind, Yasho in particular. But, again, it joins a list of stocks which in Friday's session had a very strong price volume action, and for the whole of last week, a clutch of these mid-size, small-size names have actually had a really good move. This one is not an exception to the rule.
Another one to talk about today is Zaggle. Just look at the movement on Zaggle. So they've announced a clutch of new business orders. They're going to co-brand with Nishi Forex, which is a authorized dealer for Forex cards. They have a deal with the MCure. They've signed on actually as a client, MCure Pharmaceuticals, Benetton India. So obviously Zaggle, prepares their employment sort of software. That stock is at 20% right now, and it's been up all day. In fact, I'd like to pull up the one-year chart if we could. In just 3 months, it's about 35%. And it's just had a phenomenal run up as well. So Zaggle there, stock in focus. In fact, we spoke with the management just a couple of days ago, and they say that they will be able to maintain their growth trajectory. Listen in.
We've given our guidance on growth. This year, we're going to grow 40 to 50%. Next year, 40% plus. If you think of it holistically, Samina, the spend management space is very nascent in India, right? And every company needs to digitize. There's a huge push from, the overall ecosystem to be more compliant, to reduce leakage, to have information which is on a fingertips, at a fingertips. And, that's the benefit that we provide. We increase your compliance, we reduce your leakage, we help you with your ESG goals because we reduce paper usage, it's greater transparency. And we are extremely competitive when it comes to price because we earn through our software fees and we earn through our transaction income. So it's a very reasonably priced platform for our corporate customers.
Okay, so this was an earlier conversation with Zaggle, but Hemen, I want to come to you on this stock, which has already had phenomenal run up, just 57% in the last 1 month. Any scope or any reason to enter right now?
Well, frankly speaking, Tamanna, it's a relatively new listing and we're at all-time highs. So clear blue sky. There aren't any levels, frankly speaking, to go on. But whatever limited data that we have clearly shows a higher top, higher bottom scenario, which is the basic of any bull market. So seems good, but I wouldn't want to go out on a limb and give up buy right now, simply because I'm bereft of enough data. But the setup seems very clearly bullish. I'm not sure it will continue with the same quantum and speed, but seems sound and stable.
Chokka, what about you on Zaggle? Any views there?
Yeah, I belong to traditional, very conservative school of thought. I looked at the fundamentals. Growth is great, but it's trading at around 86 P on current year earning. So this kind of stocks give me a little scare. We have already seen a lot of new age companies, how they destroy wealth. I would not buy at current level.
All right.
18% as we speak.
Ridiculous.
I don't know
ridiculous
if
run up.
Is this this is the weak chart? Yeah. Okay. I was surprised about why the spike came in just in the last 2 minutes of trade.
No, it's been up all day. But even if you look at the daily chart, the last, I think, 10-15 minutes have gone up even higher. So that's the Zaggle story. But so many more stocks to talk about. Very quick break, and we're coming right back, including to ask Hemen for his top buy today, sell tomorrow ideas. right, welcome back. We're just about 20 odd minutes from closing, 25 odd minutes from closing, and it's been a flat day, flat to negative, I would say. Nifty IT is the biggest sort of loser of the day. Banking stocks not doing too well either. The broader market's also losing steam now at this point. If you pull up, their traction through the day, the broader markets are also losing steam. But one of the big losers of the day and the last few sessions actually has been Asian Paints, down about 4% now as we speak. But yeah, it has had a weak day throughout. And one of the reasons is a clutch of notes that have come out and see it being hit by competition in the space. Now, the paint segment is a particularly interesting one because it has seen more and more players make an entry. Others are waiting in the wings, and it is a space which has been dominated by an Asian Paints for several decades. It's the leader in the pack. Now, the question is that will new players coming into the market actually make an impact on Asian Paints? There is a bull and bear case on this, and presenting both sides of that story are Mahima and Harsh.
Right, Tamanna. So as you rightly mentioned, it's a bull versus bear case where Macquarie has maintained a bullish stance, whereas CLSA has maintained a bearish stand. Now, when we talk about Macquarie, they've said that they maintain an outperformance with a target price of 4,000. What does CLSA have to say on this, Harsh?
Well, yes, so CLSA suggests that the increase in competition both on the dealer side as well as on the consumer side will dilute some of the top line that Asian Paints has, and some of the moats that Asian Paints has will get diluted as a result of that.
Right. Against this, Macquarie has argued that Asian Paints has had a very long stance in terms of paints and their market share, and they've had a good history of defending effectively in terms of market leadership. Sure.
The other argument that CLSA seems to make is that due to this pressure with regard to dealers as well as customers, what you'll see is growth and margins will increasingly start coming under pressure. Mind you, 40% more capacity added to the current paint output, obviously domestically in India, and that is a very large quantum which should therefore impact Asian Paints both from a margin as well as from a top line perspective.
Right. So the argument is that 40% capacity added will not only affect Asian Paints but a lot of other players in the industries which are much smaller than Asian Paints. So that is what Macquarie has to say on this point.
Well, so that's an interesting perspective, whether Asian Paints does get impacted or not. But a slowdown nonetheless is expected. So what you're therefore expecting is either the second rung players will get impacted, Asian Paints being one of them will have a second order impact, Mahima, and that's what CLSA seems to suggest. Now, what they're also suggesting is that the slowdown in growth will impact Asian Paints in some form or shape. Obviously, need to wait and watch as to what kind of an impact, and therefore what they are suggesting is that there is a possible impact with regard to valuations, which we'll come to next.
Correct. To that, Macquarie has said that Grasim is not, competing towards the pricing strategy of any kind of paint company. They're saying that they're targeting a particular product guarantee or product differentiation. Well, that is why they're saying that Asian Paints will not be affected that much and will not be losing any kind of market share to Grasim. But as you mentioned, valuations, what does CLSA have to say about the valuations?
Well, what they're suggesting is ROEs will contract from the 30% plus to around the 26% plus kind of mark, and therefore they've derated the multiple for Asian Paints. Asian Paints trades at roughly 60 times plus in terms of price to earnings currently, and that has been the average since the last 3 years. What CLSA has done is they've taken the 15-year average now and therefore derated the stock. They earlier had a target price of 3,017 on the share. Now they have a target price of 24.25. That's a substantial downgrade.
Absolutely. But Macquarie on this says that it has still maintained outperformance with a target price of 4,000. And they're saying that FY24 estimates PE is approximately at 48.3. And for FY25, it is approximately at 41.8. So these are the two views of bull versus bear brokerages on Asian Paints.
Oh, excellent. Really interesting presentation there. Only you guys should have swapped positions perhaps. But yeah, Niraj, that's the point. Has the fear over Asian Paints been overdone a bit? Because There are other competitors in the market. But Asian Paints' reach at the level of the actual painter, the guy who's doing the painting, is not going to be that easy to break.
Yeah. So
and not that soon either.
Yeah. So Asian Paints will probably still retain for a long time the number one player. Does the valuation come under question mark? Not just because of Grasim, but because of the fact that Grasim, there is JSW, and the others like Berger, etc. will not keep quiet. Berger is also a reasonably large player in its own right. So would all of that make pricing come off, margins come off a little bit, and then maybe multiples? Because even if Asian Paints multiples come off from whatever 60, 65 times to 55, 50 times, that is still not cheap per se, and could be accepted on the market at a reasonable valuation too. So it may not be an earnings corrective move, but it may well be a valuation corrective move.
Yeah, but typically in any market where you have one lead player and then there is a challenger, it is the smaller players who get
disrupted from a business perspective the most.
From a business perspective. In fact, let's get views from Chokka and Hemen on this. Hemen, I'll start with you first. Asian Paints feeling the heat today. Do you think it's worth picking up at these points, or would you wait for a bigger cut?
I'd wait a bit, Tamanna, because 39-year uptrend from whatever data we have, could be more than that. Last 36 or roughly last 33 months, it's underperformed. That's okay. We've had a phenomenal move, but now things are looking just a bit wobbly. And I'm not talking about the weekly charts, I'm talking about the monthly and the quarterly charts. Because, after almost 3 years of doing nothing, now things are getting a bit negative. And even the quarterly charts seem to suggest weakness. Most of the mechanical indicators are in sell mode. There is distinct heaviness in the stock, a lower top, lower bottom on multiple time frames. I'd wait a bit. I'd say 2600 is very important. That is not sounding like a prophet of doom or something. 2600 is a make or break level. We have not closed below 2600 for Asian Paints since the month ended April 21. And this we are 3 years into it. But if we break 2600, I said if not now, we are 250 points away. If we close below 2600 on the monthly chart, I think we'll see something which we haven't seen in Asian Paints in last 39 years. So I would be on tenterhooks. I'd stay away for the timing. Let's see how things play out. Earlier, whenever such things have happened, not fair to compare stocks like Asian Paints. They are in humongous upmoves. These things get digested. But this time around, is it a question of cry wolf for the real thing? I'd wait a bit. Things currently are not looking good.
So you'll wait a bit in terms of the technical charts, but let's look at it fundamentally as well. Chokka is with us, and you heard that bull versus bear case put together, by Harsh and Mahima, reflecting again the varied kind of views when it comes to the dominance of an Asian Paints in the space. What's your take? What side are you on?
I would give buy call on Asian Paints for a couple of reasons.
Okay.
Even before the reports were out, the stock was already down 15%, now 20% down from 52-week high. Of course, not just because price is down, one has to buy. That gives a little comfort. But the point is, it's not going to be that easy for other players to snatch away the market share from Asian Paints in the short to medium term so easily. And as you rightly put it, this brand is so powerful for our last 3-4 decades. The task is going to be very tough. And who knows, they may be able to snatch away the market share from the weaker player or smaller player than from Asian Paints. That is also another possibility I would consider. And lastly, the oil price corrected on Friday. I have a firm view that crude oil price will correct substantially because there are deflationary conditions in many parts of the world that always help to Asian Paints to come back with a tremendous improvement in the margin and profits. So considering all these facts, I would give a strong buy on Asian Paints.
Okay, well, let's see. So like we said, some people are constructive, some people are not. Let's see how it shapes up. What it seems is that people are very constructive on is Ganesh Housing. Everybody's constructive because the stock is in upper circuit, only buyers, no sellers. Let's get in and remember, it's trading on high volumes as well. Mihika Johnson with why this could be the reason. Mihika, good afternoon.
Yes, the stock did hit an upper circuit of 10% in early trade, and the stock has also surged 98% year to date, and volumes were over 2 times its 30-day average, with total volumes at 2.68 lakh crores. No specific triggers very recently, but the company did have its Q3 earnings where revenues were up 2.72 times to 183 crores. EBITDA was also up almost 3 times year on year, and net profit also rose 2.32 times at 100.6 crores. The company's also significantly reduced its debt from FY29, and as of March 2023, it was totally debt free. It also has 2 ongoing projects that are set to be completed in March 2026, and the expected free cash flow out of that, those 2 projects, is around 650 crores, and it also has 3 planned projects that are expected to be completed around 2033, and the expected cash flow from that is also 9,350 crore rupees.
All right, thank you for that, Mahika. Ganesh Housing there on an upper circuit in trade today. So many stories to look at, but what is the big theme coming in? And an interesting conversation we had today is with the management of Dixon Technologies, Atul Lal. Couple of announcements over the weekend saw the stock go up in trade. It hit a live high today. It's come off those highs as well, but it's an interesting take that Atul Lal has, because the PLI scheme allocations, which are expected post-elections in July, will become important, and of course their outlook on the semiconductor game.
So the scheme tenure is 5 years, and we have already made the threshold investment as committed to the government. Order book is already there. We have signed the contracts. The production is being planned. The lines are being set up. The organization is being built up. And as I shared with you, our first year is for under the PLI-2 scheme is going to be 24-25. For one of the brands, we are targeting production to start sometime in Q1. And for the second large brand, we are targeting to start the production in Q2 of the next fiscal. That's the plan.
Well, a clutch of these stocks are hitting life highs, right? So, or trading at good highs. So Dixon is one. Sona Comstar is another one, which is up 2.5% today and continues to rise and shine from where it was. So do keep an eye out for that. And the Adani Group stocks, we've spoken about them. Adani Green at 1970 is certainly packing up punches there. 1972 at 2.5%. I think it is circa its life highs as well. So clutch of stocks trading on very on reasonably high levels. Do you track Sona Comstar, Mr. Chokkalingam?
I've been tracking it. Of course, as you said, the stock has gone beyond my valuation comfort zone.
Okay, so it's gone beyond the valuation comfort zone, but and in some sense that's right, because it's not a cheap stock at all relative to all the other auto ancillaries available. I think this one is extremely expensive, so that's to be kept in mind for sure. What else? I'm just trying to see. There is this Cupid, which continues to be on an upper circuit. You know, this is a story that dreams are made of. Cupid, until the acquisition was done, was nowhere in the picture. Now you look at the 1-year chart and you will see a sharp uptick in Cupid from 500 odd that it started rallying. The stock is now non-stop at this. Look at that 12-month gain, 891%. It's just had this one-way move in the last 6 months, and it's trading at 2453. Mr. Chokkalingam, do you track Cupid at all?
I try to learn from it after seeing such a massive rally. I'm sorry, I didn't able to understand why it is trading at over 120 PE.
Yeah, it's an extremely expensive stock, I'm sure. The volumes, today it's gone up on high volumes, but the volumes are about 10 times the 2-week average. And it's really gone up on a very high base as well. So good going here for Cupid. Hemen, I want to ask you to comment on Cupid, don't worry. What I can ask you though, along with your closing strategy, is to give a comment on Alchem Labs. I don't know if we've spoken about it, but that one has fallen today on fairly high volumes. So give me a call on Alchem Labs if you can, and then leave us with a closing strategy.
I heaved a sigh of relief, Niraj, when you didn't ask me about Cupid, because I was trying to work out an exit strategy, escape strategy, so to speak. And now you bowled a dangerous bouncer at me. Well, frankly speaking, on a serious note, Alchem has recovered very strongly from 4660 intraday low. It's come back and clawed back to close, not close, I believe will close about the 55-day exponential moving average. 4,750 has been very strong support. It's not closed below this in a few months now. I wouldn't have a call at this point in time, but it's definitely not a short, because if it's recovered like this, on volumes have gone through the roof, almost 25 lakh and counting. So whatever negativity, whatever it is, I think the sell-off seems to have taken place. Yes, after a couple of trading sessions, if we were to close below 4,800, I think then that would be trouble around the corner. But currently it's in a no trade zone. But I wouldn't want to short at this point in time, Niraj. Coming back to stocks, the market seemed a bit iffy, but I have a buy call BTST on, okay, I don't need to give a BTST, but I have my calls to give. So I have a buy call on Adani Enterprise, because, that stock was good, is good, and I believe should remain well. So buy call on Adani Enterprise is 33.30, stop loss 32.30, target 33.50. Sorry, that is 35.50. I'd like to just change that, my bad. Secondly, a buy call on Tata Consumer. Tata Consumer is on the verge of breaking out, or it has broken out of a consolidation phase. And yes, it's on the verge. Sorry, it hasn't broken out, but it's a multi-week consolidation phase, cusp of a breakout. Buy Tata Consumer at 1175, stop loss 1150, target 1225. It's a modest trading target. I believe it's heading towards 1300 and more. Niraj.
Chokka, let me come to you. I know you won't give us perhaps a BTST call, but your top picks in this market right now, where you're seeing a lot of sideways and range-bound trade. Perhaps there is a wait for the next big trigger. What do you have on your top of mind?
Yeah, though the small cap valuation is highly stretched, in every market you have opportunities. There are stocks which are ignored. One such stock is Sterling Tools. This is into fastener. It's a very more than 2-decade-old company. It has been doing very well. And recently they got into EV component. And I like this stock a lot. I have studied its fundamentals. I believe this stock can easily give a 20-25% return. Then if I am permitted, I can talk about a small cap or micro cap stock, Mindtech Technologies. It's a IT service company. If you see recently, the company claimed to have got 22 deals. It's a cash-rich company, a lot of cash on the books. It's a MNC stock, small, but I want to tell you that this is only
Mr. Chokkalingam, sorry, what's the name of the stock that you mentioned?
Mindtech.
Okay. Mr. Chokkalingam, may I request you to just hold on to that thought, because you've just broken a piece of news. I would love to understand about Mindtech, but I need to go across to my colleague Smriti, who's broken this story on Wockhardt. The stock is up 7.5%. Smriti, what are you learning?
Hi Niraj, yes, Wockhardt will raise 400 crores through a qualified institutional placement. This is on priority basis, and which is understandable. If you look at their debt, it's at 933 crores while their cash is only 84 crores. So they are in a hurry to raise this amount. Now about the price, while the price has not been fixed yet, it will be around 10-day average of the price, which we have calculated, and it comes around 561 rupees. So probably in that range of 550 to 560 rupees. That'll be the price of QIP. Then, last year the company tried to pass a resolution to raise 6,000 crores through a promoter entity. However, that failed. But the shareholders did allow the company to raise this amount through other institutional buyers. So that's probably what's going to happen. Now, this fundraising is still a couple of days away, but it's happening.
Sorry, did I hear you give out or tell about when is it that this QIP is likely to be launched? Will it happen soon, or will it happen with a bit of a lag?
Well, there's definitely a lag there. The bankers are still in the process of determining the price for it. So we're still a few days away, a week or so.
All right. Big news there on Wockhardt, and that stock about 7.5%, 8% up. As we've been breaking that story here on NDTV Profit. Big moves there. 400 crore QIP is the exclusive that we've got for you. Quick word from our experts on the Wockhardt counter. Chokka, can I start with you?
I'm sorry, I haven't tracked it in the recent time.
Okay. Fine. Hemen, on the charts, how are you liking Wockhardt? 561 is the 10-day price that we've calculated. We don't know what the exact QIP price will be, but we're learning it will be a 10-day average. As of now, that's 561 rupees.
So notwithstanding that dip due to the placement at 561, stock gave a multi-month breakout at 261. Not anticipating the price of here, but I believe 650 and 800 is what I would look at a few months down the line, Tamanna.
Okay, by the way, that news or that story from Smriti is triggering a further reaction on the stock because Wockhardt is now ending at the highest point of the day, if you will, 615. It was at about 608 when we started, when the story broke on NDTV Profit, and now it's trading circa the highest price. Now, this could be interesting because remember, Wockhardt has that one drug which they are banking on and which could be a big game changer, if you will, in the words of Mr. Habil Khorakiwala. You know, viewers, for all of you who are interested, there is a conversation that my colleague Samina had with Habil Khorakiwala about a month ago, and you can go on to our website, ndtvprofit.com, or any of our social media handles or YouTube and try and hunt for that interview. It gives in detail the drug and the efficacy and the kind of business that could come from it. So this, granted, is of course for debt reduction, but there is also a business case that Wockhardt is trying to build out around that launch. So keep this at the back of the mind. 612 and counting is Wockhardt at the current point of time. Mr. Chokkalingam, very quickly, in about 30 to 60 seconds, if you can explain Mind Tech and why do you like it?
Yeah, it's a small MNC, micro cap stock. It's suitable only for risk-taking people because it's a micro cap. Debt-free, lot of cash on the books, and diversified clientele profile. And few weeks back, the management has reported to the exchange that they have got signed 22 deals. So all these are well for Mind Tech.
Okay, let's start wrapping up the markets for our viewers. Mr. Chokkalingam and Hemen, thank you for taking the time out and being with us on the show. But quickly wrap up what the markets are doing. At close, 0.4% lower for the Nifty. So it's kind of succumbed to a little bit of selling in the last half an hour from 0.2 to 0.43. Wonder if banks have led that. Should get the bank Nifty. 0.5%. So banks have certainly led that. Mid caps and small caps could be flattish, but we should get the heat map up because yes, the last half an hour we have seen some bit of selling for sure. Asian Paints is down 4%, so that one is sulking all right. I'm wondering where are the banks which would have done. So now they're in the top 10 losers. It's only 0.5% down for the bank Nifty per se.
It's the IT stocks as well today,
as well.
Niraj.
Yes.
The IT index should be down about 1.5%, nearly 2%. So IT stocks definitely. Let's pull up the Nifty contributors, right, and see what's really contributing to that pain.
Yes.
Because yes, you do have an Asian Paints at the bottom, but
ICICI Bank.
Yeah, there you have it. ICICI Bank, Infosys, and ICICI Bank between them, and Asian Paints TCS. So it is an IT play, which is...
It is actually more an IT play.
Yeah.
The last half an hour has seen some selling into banking because the bank Nifty from being flat is now down 0.5%. So that's quite stunning. On the gaining side, it's the Adani Twins and L&T to kind of stand out.
Correct. The advanced decline ratios for the day also will tell you the kind of volatility perhaps you've had. And look at that. It's in the last half an hour, 20 minutes or so since we've been tracking this, Niraj, that you've really seen that gap open up and, the ratio sort of getting skewed. We should also just pull up what the mid-cap losers are for the day, the mid-cap losers and the gainers for the day, because you've had an overall, I would say, tepid day of trade. Nothing too exciting happening. The standout stories on the positive and negative sides are Asian Paints. One of the stories really of the last hour of trade is the recovery here. And HPCL, if you pull up a BPCL, IOC, all of those you were talking about as well, Niraj, and something you alluded to in trade setup, that is the worst over for OMCs perhaps. during close, you did see that coming in. Maybe an HPCL and an IOC can also be pulled up altogether. So yeah, you've had a decent-ish recovery over there.
Yeah, you have to argue that, yes, and Tamanna is right. IT stood out like a sore thumb. We spoke about that a lot of shorts piled there ahead of the expiry week, and that's what's happened to Nifty IT, 1.25% lower. So keep that in mind. Just want to wrap up with a line chart of Wockhardt, because that was a big exclusive that we broke on NDTV Profit. If you can just bring that one up and see how that one has ended. In the dying minutes of trade, viewers, you would remember, if you've just joined in, we broke an exclusive story about a possible QIP. And Tamanna, good reaction to that one as well.
Yeah, absolutely. Wockhardt close to its day's high at 619, not quite there. Maybe a little pull off right at the bottom. And yeah, post-afternoon, you saw that stock beginning to rise. And then, of course, NDTV Profits exclusive there. So that will be one stock to watch in trade tomorrow.
Yes, indeed. But for now, from Tamanna and me and the team that put this show together, thank you so much for watching. Alpha Strategist with the Motilal Oswal Wealth team coming up next. Stay tuned.